Hi guys, this is Mark Shawson, the Pattern Trader. Waqwas was kind enough to send in to me this very thought-provoking question. I thought it was a question that's on a lot of people's minds, and I have to think about how I'm going to answer it. It's kind of a multi-dimensional kind of question, and so let me just briefly read Waqwas's question. He says, "Hey Mark, can you make a little video about these dreaded weekends and how we should be trading? I usually leave my trades open over the weekend as I'm looking at the bigger picture, but it's happened a few times to me and I wanted to know your thoughts." I guess he was alluding to a certain trade where he was in profit 150 pips or so. It had a bullish week and it was looking good. Then the market opens up on Sunday, sounds like with a gap against him. The gap gets closed and the market keeps going, taking all my profits with it. The weekend just breaks the momentum the market has. On Friday, there was no sign of any bears, and on Sunday, they built momentum from the gap and carried on. So I guess Waqwas was, talking about a trade that looked like it had momentum. Sunday occurred, and then there was, some gap that went against him. And actually, it would have been nice to know the actual trade, Waqwas, so I could have looked at, what you were looking at, because sometimes we have momentum and it looks like something, but that's kind of what we have to differentiate. The kind of continuation moves from the counter trend moves. So sometimes there are counter trend moves, they've got momentum, but they're just that. They're counter to the underlying trend, and then if Sunday just kind of knocked it back in the direction of the underlying trend, then I can understand that. So without understanding the particular trade you're in, Waqwas, it's hard to comment directly. But let me just comment on trading on Sunday through a report over a holiday. To me, it doesn't matter. When I look at a trade, I'm looking at the trend, the pattern, the price action, and then making a determination based on the accumulated evidence of what this chart is telling me of whether I should, stay in it, or if it's just a kind of a counter trend bounce where I'm just looking to take a piece out of the middle, or something that is more sustainable. So I'm, by and large, always looking for those sustainable trends, those patterns that will lead to sustainable moves. And then once I detect those, then I don't care. If it's a holiday, if it's there's announcements coming out, I'm going to stay in that because the underlying pattern, the underlying trend, tells me that eventually my bus is going to get to where it is, destined to go. I just don't know how many stops that bus needs to make until it gets to the destination, if you kind of, get the metaphor. And I guess the best example of that, that I can think of, or just a good example of that, is a chart that I'm going to flash before you now. This was a chart that I did. This was a trade that I did last year that was, pretty memorable because of the outcome and because of the time I spent in it. This is the U.S. dollar versus the Japanese yen. Now, before I show you the chart, I just want to show you the email that I sent out to all of our members, indicating what I was looking at on the chart, and then indicating where I thought the suggested entry was. So you can see, as on this chart, I was looking at a descending pattern. This is a bearish pattern, and then I was looking at a double top right at the apex of that downtrend line on the descending line. And you can see with that arrow is indicating that if the market broke below that low of that very narrow range bar, that was going to be a great place to enter at 111.61. And I sent this out to thousands of our members around the world. Now I'm going to show you a chart of where I entered the trade at the double top, and then where I exited the trade 3.5 months later. So now you can see where I indicated to get short at 111.61, and then I eventually got out of that trade at 105.17. I made 650 pips on one trade. Now that trade did last. I was in that trade for 3.5 months. which means that I was in it over the weekend. I was in it for Bank of Japan monetary reports. I was in it for U.S. Federal Open Market Committee reports. I was in it for all kinds of news, no matter what. But I had full confidence that that trade had to go from the 111.61 all the way to the prior December lows, which were around 104. And that's why I kind of, just put a take profit a little bit above the 104.50 at 105.17, because I knew it kind of had to retest that area. Actually, after the entry email went out, I kept on telling my members that despite, anything that's going on in the market, this market needs to go and probe those lows around the 104. And that's exactly what I did. So I didn't know the news. I didn't know what was going to happen in the 3.5 months. I just knew that this thing had to fulfill the pattern, this descending pattern, this cadence that was in. And so this is an example how once I understand the trend, once I understand the governing price pattern, once I understand all the preceding price action, and I should, kind of refine that word understand, because, the market is inherently unknowable. I don't want to say that, I have any pretense, any inside knowledge or anything of that nature. But to my way of looking at it, the market had to go lower within the cadence of this descending. And I just stuck to my guns. You can see there was a period on this chart where it was 6 or 8 weeks where it went sideways, and it actually went sideways to higher. So there were many times during this trade where, you kind of doubt yourself, you're giving back profits, and this is kind of where the discipline sticks in. This is where kind of understanding the chart that you're looking at, and this is why, understanding the price on a weekly chart, which I'm showing you, is very different than what most people do when you're looking at a 15-minute chart. And if you're looking at a 15-minute chart or a 5-minute chart or a 4-hour chart, these are all short-term time frames, and you simply cannot see the cards that you're holding. But by referencing the weekly time frame, I could see what was going on in the bigger picture. And so despite the fact that the market was going sideways or a little bit against me, I was really never in jeopardy of giving back, the original profits from my trade or going into a losing situation. So from the get-go, I was in profit from this trade, and then once I was in profit, I just let the market do its thing, and I didn't know how long it would take, and it ended up taking 3.5 months, which meant I stayed through 16 weekends, 16 Sundays. There were gaps for me, there were gaps against me, all during that time, but ultimately I kind of understood where this market had to go. I stuck to my guns, and ended up making $300,000 on this one trade. I'm going to show you the P&L. As it turns out, I did a number of trades. So once I see something, I will actually add to my trades. And you can see that I had 6 trades in and around the original entry order, and ended up making, a nice little 6-figure package. And frankly, I'm just looking to do this 3 times a year. So many times people are trading in and out for the bump, the rush, the action. But I'm looking for setups that will extend. And then once I see those setups, I frankly don't care if it's through a weekend, if there's an FOMC report coming out, if the president is going to have some special report at 9 p.m. Eastern Standard Time. It doesn't matter. I'm holding my trade based on what the trend and the pattern is telling me, not based on the whims of what might come out or some weekend event. So to my mind, if there are gaps, typically the gap should be in the direction that I'm anticipating. So I don't mind sitting in through a weekend. I don't mind seeing some kind of outlier event, because to my mind that should just be a catalyst to send my trade in the direction that I'm looking at. Now, how do you finesse this? So typically, when I see these setups, I know it in my water, but really what confirms it for me is that the market tells me. When I put my entry in, like when I put my sell stop in at 111.61 on this trade, there was never a time where I wasn't in profit. So the market told me immediately, as it triggered my entry, it went to about a 200 pip profit right after it triggered. Now, some of that was given up on some subsequent market action, but I was never in a losing position. And so once I saw the setup, then the market confirmed it for me. The price action and the thrust through my sell stop, told me that I was on the right course, and that I had the tiger by the tail. And once I understood that I had the tiger by the tail and I was in the right direction, then I simply just added according to my prescribed methodology. So I hope you got a ton of input from this video. I would love to take any more questions like Waqwas had. I think it informs all of us. And so if you'd like to submit your question, please do so. You can send it to support@thepatterntrader.com. So with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.